economic events. Generally, Bloomberg 5 Things You Need to Know is a good place to start. This is free and they'll email it to you. You don't need a Bloomberg account to get it. We just gotta, maybe I gotta reset my page. Seems like it's still loading. We'll give it a minute. Check out FX Street. This is another free place that you can get a little bit of perspective of not just what's on the docket today, but how much impact it's expected to have. The way they run this is they look back and ask, historically, when these numbers were reported, how much impact did it cause in the market? It's not a guarantee. So even though it looks like it may have a light impact, it could be impactful. Or if it looks like it could be really impactful, there's times where it's going to report and nothing happens. Yeah, I mean, that's usually the way it goes. What I listen to in the mornings when I'm listening to Bloomberg is how confident are they in the numbers? And when I start hearing them use phrases like, well, we know it's going to do this, or we know the numbers of that, they don't know. They don't know at all. And when they get caught off sides, we get those drastic moves. So I really start poking my head up a little bit more when I hear them getting cocky and talking about they know. They've had some real serious misses in the last few months. So, their track record of what they know isn't any better than ours. Still not seeing a 5 Things You Need to Know. Interesting, though, because I had the email from them really, really early this morning, but it's not showing up in their list. There wasn't much in the email, anyways. Just wanted to point out that this is where you get it. Apparently, I'm not scrolling down far enough since it came out so early. Maybe it got buried. Still, it's a decent read. Just kind of gives you a heads up on the day, something to do on a daily basis to get in that habit of recognizing any potential headaches or risks or roadblocks to anything that you are wanting to do on the day. So we bring it over to Thinkorswim, go to the Market Watch calendar. 8:30, 10, and 1 o'clock. Although I have to say that rig count really isn't going to do anything for nothing. I worked on the drilling rigs for 20 years, and I can tell you that the market doesn't get impacted by how many rigs we happen to have out or not have out, right? So this is a pretty light docket compared to, what we've had going on this week. Basically by 10 o'clock, you're good to go. It'll only be sentiment at that point, right? Whatever's going on in the news. We still got the whole Russia Ukraine situation kicking off. And of course, that can greatly impact our market. They did a really good job pricing it in because the other night, that'd be Wednesday night going into Thursday morning, when the invasion started, there really wasn't as hard of a sell off and not a hard immediate sell off as we had expected there to be. So they did a really good job. Now it's all back on how much is this going to affect inflation? How much is this going to change the anticipated rate hikes? And there's already been discussions of that. The 50 basis point shock and all seems to be off the table now completely after this event has started. And there's a gauge that they use to kind of anticipate how much is being priced into the market. It's a good read on that in Bloomberg if you want to know more about it. The main takeaway is the assurance or the confidence of a 50 basis point rate hike has dropped significantly. So that's a really good deal. The 111 or the 11 cog lines have just been phenomenal. If you don't have them on your chart and you're trading with the ES, I got to kind of ask why not. The 11s aren't the only ones that exist, but they absolutely are the easiest ones to find. You don't even have to find them. You just see an 11 in market. It's pretty much that easy, right? You can see that the got an indicator that's on that's a little different than normal. It's a standard deviation. I haven't used it in a long time. I haven't had a need to. The move that we had yesterday, um, was one of those record-setting days. We've only had like 6 on the Nasdaq recently in the history, right? So, and got to kind of put it into context. It's measuring, seeing the Nasdaq down on the day more than 3%, and then seeing it reclaim those 3% and then be up on the day beyond that. That's an unusual thing. It doesn't happen very often normally, but in high volatility markets like this, it tends to happen a little more frequently. Um, we had one last month and we had one this month, and we're talking record setting events. Hopefully you guys really took advantage of it. I did. I got in, stayed in, and played Minecraft all day. I barely did any kind of trading yesterday other than just staying in it. That's the kind of day it was. And less trading yesterday than I've done all month. And yeah, I got way more out of it. There's a lesson in there somewhere. So as you can see right now, we're kind of not really doing that much. The market really is waiting for some of these numbers to come out. We are building a bit of a megaphone so you can start measuring or quantifying that. Yesterday's high is the line in the sand for the upside move. We've got an ADR of over 2%, and we still have market maker move in effect. This is very important to recognize. It has an additional expected move today. So when you go in and you look at the expected move, come on, there you go. Look at the expected move. We've got a $54 expected move with an additional $30 added to that. All right, so we have an $84 expected move today between now and the close today for the ES at this point in time. And that's an important distinction because the ADR, that's your average daily range. It's looking back over the last 20 days and saying on an average day-to-day basis, how far have we moved? Around 2% a day. Well, 12 hours are already gone, right? So we only have from this moment all the way up until the end of the day today. How much room between now and the close could the ES move? $84, and it would not even be expected, considered an outlier move, right? It would be considered a normal one standard deviation reach. And if you're thinking, oh, I got to get this indicator, where is it? It's in the Discord where all the other indicators are at. There's a search feature in the upper right corner. Just type in the words standard deviation and start scrolling down the list. As you'll notice, there's a lot of them. So an upside move, we have to get through yesterday's high, and then we will focus on this lunchtime pivot point and then the open of yesterday. That would get us back above the 43.11 cog line, and the open on Wednesday is very close to where it had an intraday high Wednesday, right? They're very, very close. I wouldn't bother to mark both. I would mark the open and then the Globex high of Wednesday, right? That way you're just not overwhelming with too many lines. And really, depending on where it's at, yeah, okay, it's worth marking both. There'd be a reaction when we got to that high as well as that open. Should the market not like some of the economic news that comes in this morning, we're going to be looking for a downside break back through 42.11. Keep in mind that when we move like this very quickly through a zone, should we revisit this area, we will go back through it just as quickly. So when we start looking at things like volume profile, we do have that shallow area back here and one little bit of support right at our own Globex low. So it's an easy place to mark. Just mark today's low, because if we break beneath this Globex low, we're very likely going to punch right through 42.02. Look how shallow that area is. For being a psychological level with a lot of angst on it, there's not much there. I'm kind of surprised by that, but we'll be able to move through that relatively quickly, which would get us into the cluster of yesterday's midday, that beautiful flag where we paused before kind of taking off again like a rocket ship. That's where it's at. Notice the volume profile of yesterday and how significantly out of the box we were. And when we leave the box in the volume profile, you have to have some context of, are we continuing to move farther away or not? For everybody that I talked to yesterday that was struggling, they kept saying, well, I didn't trust the move. We had already moved so much. I didn't trust it. I didn't trust it. I didn't trust it. This is one of the things that can help you with that. Are we continuing to move farther away from the box or not? Now, this one tiny little piece doesn't really offer much of anything, right? It would need so much more than this to convince me to get into a trend or to trust a trend. It's just one more piece, right? When you add that to the AD and you add it to the cumulative tick from yesterday and just on down the list of all the different things that we would normally look at. I mean, look at these things. Look at that. Look at that massive crossover in the Russell. And like I've talked about before, that Russell is the game changer. It's the one that signals more than anything else. The scope and depth and breadth of this move. How could you not trust that? Get in, go make some peanut butter cookies, and don't even look at your position again. Just let her go. Cookies? I like cookies. So same thing for the Nasdaq. We've got that megaphone pattern kicking off. We've got an ADR of over 3.3% with the market maker move attached to it. So when we go in and ask the question, how far between now and the end of the day could the Nasdaq move without it even being considered an overly aggressive or too big of a move? It would be a $300 move. $300 move from its current location, higher or lower. You got 203 and the 106. Think about that. From our current location right now at this point in time, we could move $300 higher or lower, and it would not even be considered an unusually large move. That's a lot. Our high of yesterday coincides with all this trash back here. So should we be able to breach through the high of yesterday, we're going to be focused more on Tuesday's level than we are this Wednesday peak in the Globex. It's worth marking, but I wouldn't give that one as much context as I would this rounding number from Tuesday, right? So you're talking about the quarter, the 75 zone from Wednesday Globex, or the round number from Tuesday's midday high. First touch should be in play on either one of those, but it's still going to be the resistance we have to deal with. And that's if we see that upside move. The cup, the handle, we can plot and measure that for next week, right? It's not too much to think about. Thinkorswim's got that new tool here, quadrant lines. So just snap it from the cup to the base. Your first target would be the 50%. It's basically measuring this cup and then giving you 50% of that move to the upside. That's our first target. And then 100% move would put us all the way up to 15,100. That's not going to happen today, by the way, right? That would be a continuation play as a part of the swing trade. I was going to swing trade it, but we moved so much that I closed my swing trade out before we even got into the close. Yeah. And then I also went short by the end of the day. It's one of the reasons that I took my swing trade off. So Bitcoin managed to recover a little bit in the afternoon session, gave it off, and then has just been kind of holding the line underneath 4,000. It's worth keeping your eye on. It's a new thing when you think about, 100 years of the way investors have hedged into gold and hedged into silver and used those in times of uncertainty, monetary policy shakeups. This is a new thing compared to all of that, right? Sure, it's been around, 5 or 10 years, but in the grand scheme of things, it's still a baby. It's still in its infancy, and we don't quite know, especially now that the banks are getting in it, how much that changes the game everywhere else. So you definitely want to keep your eye on Bitcoin. You don't want to see any exaggerated moves in any direction at all in this thing today. You can see that oil gave a lot of it back yesterday. The funny thing, it was actually signaled earlier in the day by all the oil names that we would watch in the ETF and the XOP, right? So that was actually a early warning flag. Normally the futures would lead the companies, and this time the companies led the futures. So that was an interesting play. I didn't take it because I didn't trust the setup on the futures versus what I was seeing in the ETF. It looked like the bonds were trying to recover a little bit, but they are continuing to break down to the downside. This is kind of a good thing if you want to see us get uh, back up to where we were yesterday and maybe get a little more out of it today. The thing is, look at the breakdown that we're getting and then recognize we're not getting the reciprocation on the other side in the stocks. When we give it a little bit of context, we're above that 153, that critical line in the sand, but we're headed towards it like a brick in water. So at this point, we're going to be looking for gap close. Hopefully, quote, quote, right? Hope isn't a really good strategy. Hopefully it holds at that 153 area. So we really want to keep our eye on this, see if it plays out. We'd really like to just see it calm down and perhaps stay inside of this box. That move in the dollar yesterday was a little bit of a game changer. If you notice, that coincided right with the pause in the market, right? So that started to kick off, and this is a perfect example of a blow off top. So if you wanted to study that pattern in a little more detail and see what it looks like when it begins to unfold, that tweezer top, that's a good example of it, right? This is, if you were to flip it over and see the same signal to the downside, that would be your capitulation play before a rally off the lows. When we talk about reversal patterns and studying, 2-bar plays and 3-bar plays and single candle analysis, the tweezer tops and capitulation blow off tops, those are great reversal signals. So the market didn't really seem to know what to do with it. And that's where we kind of stalled out. And then as it stabilized, then we began our rally back through again. Yeah, they're still not messing with the rate hikes. They seem to really be pricing that back out again. All right, S&P 500, set it to pre-market change percent. We don't want 500 names, so we need to use the filter and knock it down a little bit. It's almost impossible to get to 100, so just get close. 92 is fine. Doesn't need to be perfect. You're trying to get a little bit of depth and scope on the morning, not trying to find an individual name per se, trying to get a more of a feel about how this market sentiment is. Need to adjust the color scheme because you can see how there's a lot of gray. Do that, hit the 1x and change it. So we got some big names that are slightly up. Slightly up doesn't count for me. Needs to be up at least 0.5% or better. Keep in mind that the S&P has financials in it. The Nasdaq 100 does not have financials in it. So when we are comparing these two indexes, that's should always be front and center in your mind. What's going on in finance, and then what's going on in the index without finance. So it seems to be a risk-off environment, but a lot of these names are not moving, extreme. Let's kind of take it off of this, set it on the Nasdaq 100. We don't need a filter here because it's already 100 names, but we want to keep pre-market change percent, adjust the color. So a little bit of move in Tesla. I didn't have the capital available for another position, or I would have grabbed this yesterday. And I posted that in the chat. Hopefully somebody else had, the open capital to continue to build out their portfolio. But it seems to be on the move this morning again. Chip sector a little bit, mostly not so much, right? Nvidia, Qualcomm, Intel, AMD's up though. So when we're looking at these names on the list, it's not one individual name, right? We want to focus on the aggregate, the peer group, the industry, the sector. So with this scan here, we're asking how many names in the Nasdaq are down at least a half of a percent. 14 names. So 14% of the Nasdaq is down a half of a percent, but how many are up a half of a percent? Yeah, 5. And it's not an aggregate sector either, right? We've got the EV market in there, the chip sector in there, even some drinks, data processing, so that not one individual sector standing out. Take it over to the S&P, kind of ask the same question. How many names in the S&P are up this morning? Now, this is showing an industry that's up this morning. Definitely something to pay attention to. 3 out of the 4 names are all aerospace and defense. And security yesterday was absolutely nuts. Go back and look at the security names and how well they did. Just a phenomenal move. And then for the S&P, how many are down a half of a percent? 16. Now, a lot of these are your technology names. Kind of makes sense because technology carried the day yesterday. It would make absolutely perfect sense to see them stall or maybe sort of fade off a little bit. Yesterday was an interesting day because on one hand, we had to run the rally back up, but then on the other hand, we had to sell the rip, right? Which is why by the end of the day, I was going in and putting on my shorts. Uh, they got posted into the bullish bears alerts, went long in energy again, and then short in SPY. All right, so the S&P has those legacy sectors, energy, finance, technology, but it really doesn't cover the more modern sectors that we need, like crypto, right? So you can see crypto this morning mostly doing well. This crypto list is not about individual coins. It's more about the company that's either really heavily vested in blockchain and or heavily vested in holding coin. And those names are up square this morning. Nuts. It's got a lot of resistance to it. May end up building a short on this. Um, bum, bum. Yeah. All right. Well, we will revisit that later. I will be streaming today in the large caps. I know there's nobody scheduled to stream, but I don't care. I'm going to come in and stream anyways. And it covers stocks, options, futures. I'm not much for pennies though. I think I'd probably just disappoint you penny traders because I don't trade too much pennies. I go in and trade things like rig, but this is a really fun thing to day trade. It's cheap, it's really liquid in the options. Just a really great product to day trade. I usually keep a list 2 or 3, maybe 4 companies of great, fun, cheap things to day trade. But I definitely, certainly don't make my living penny stock trading. A waste of my time and effort to try to make a living trading that junk. There's definitely an easier way to make a dollar. So crypto looks good. Another sector that we have that doesn't really fit the old school S&P is the electric vehicle market. So you can see a lot of names on those lists: Li Auto, LCID, Ride, even the legacy names like Ford. GM is basically flat. And the way that I like to approach this is it needs to have moved at least a 0.5% up or down before I consider that it's up on the day or down on the day. And then the marijuana sector. Now, it's kind of mixed in there. And just like with every other sector, it is worth breaking down individually into its different components, industry wise. Are they, is it the marijuana real estate industry, which is where, XXII comes in? Or is it more of like your recreational, uh, medicinal combination of both? So it matters. And it's often why you'll see things like this, where some of the sector is doing good, some's kind of not so aggressive, and then some are off to the downside. It's because of what sector, what spot inside that sector they belong to. On a day like this, if we can't really lean into the sectors, which I mean, at the moment we've got a lot of possibilities, but should it fade out and we lose these opportunities in the sectors, lean into your watch lists. The weekly options watch list is a good place to start. If you want to dial that in even more, I did a video where we go over to the CBOE website and we get a list of the most heavily traded products and companies from January, and then we cull that list down to around 100 names. You can take it a step beyond that and build yourself something like a protocol system. It would be picking the most heavily weighed names in each of the sectors and dialing your list down to around 20 names. Of course, when you filter and weed out your watch list like that, you're very likely going to miss something because you've got a very tight list and you're not looking at a broad spectrum across the board. I'm kind of okay with that, right? I'd rather be really picky and miss an okay trade than be distracted and miss a really good trade. So looking at the list of the January liquidity, it's a lot of really great names on that list that are primed for a move. And after that move in Twitter yesterday, this is a perfect example of the scope and depth of what we're talking about. That move was so aggressive yesterday that at the bare minimum, we're going to expect a sideways day today. Most definitely not a continuation day, right? And the market can do whatever the hell it wants. So I might sit here and say, yeah, no, we're not expecting another day like yesterday, but it could still happen, right? Statistically speaking, it doesn't happen, but it could. It could still happen. We could get another day just like yesterday. More likely, we're not going to get anything today, and it's just going to kind of hold the line and try to heal itself a little bit. They stripped the volatility out of that market like a mad demon. So hopefully you guys took my warning yesterday and was not trading just straight up naked calls. Because if you did, you didn't make half as much money as you should have made for the amount of risk that you were taking. All right, guys, that's what I got. Be careful, be safe. I will see you all at 9:15 in the large caps chat room. I'm obviously am not going to fire up the two different Zooms. So if you're from the futures chat or the pennies, wherever, we're still going to be using the large caps. And more than likely, I'll post the link because somebody will not be able to get into it, won't be able to find it, and will need to have the link handed to them. Right. So you'll see the link posted in the chat.